Welcome, and thank you for your interest in SolarShare. Have you ever wondered how you could achieve more than a financial return from your investments? In this webinar, I'll take you through the benefits and risk of your investment, the SolarShare background, and how you can earn a financial return while creating a positive environmental and social impact. SolarShare leases commercial rooftops in Ontario and builds solar projects on them. What makes us different from other solar developers is that we're a not-for-profit co-op, and we offer the public an opportunity to invest in our projects directly through us. Our focus on community engagement means we bring more and more of the Ontario public on board with renewables. Here's a quick summary of the investment offering. The total offer is $10 million, of which we've so far raised almost $5 million as of July 2014. Our bonds pay a fixed 5% return to investors, and any resident of Ontario or business is eligible to invest. The interest is simple, not compounded, so it doesn't roll into your principal. There is no maximum investment in solar bonds. Before we get into the benefits of this particular investment, it's important to understand why we're doing this. We know that climate change poses great risks to our health, the environment, and our economy. We also know that human activity related to greenhouse gas emissions from electricity generation is accelerating climate change. We have the technology and resources available today to power the world 100% by renewable energy from sources like wind, solar, biogas, water, and with a little conservation. So the problem is clear, and one of the key solutions is clear. But the question SolarShare is trying to address is, how do we engage individuals and amass the collective will needed to implement this solution? How do we bypass governments and utilities who may not be on top of the transition to renewables fast enough to meet the urgency of climate change? The SolarShare solution is to do it cooperatively. We're a powerful grassroots movement, but with a strong business model. Most importantly, we offer individuals a competitive financial return for doing the right thing. Our process looks like this. We find a commercial rooftop suitable for solar. We work with commercial developers to build the project and apply for a contract with the Ontario Power Authority, or a feed-in tariff contract that lasts 20 years and pays for the electricity we produce. We finance construction with capital from a group of private investors I'll tell you about in a moment, and then we refinance the project using bonds sold to our members. SolarShare is currently the largest renewable energy co-op in Canada and the first to offer the public a chance to invest directly in low-risk, fully operational solar PV projects. When we finished our 2014 build, we're poised to be the largest in North America. SolarShare was incorporated in 2010, around the same time as the forming of the Green Energy and Economy Act. The time was right across sectors for a renewable energy co-op to thrive. We had strong public policy to support our growth, a team of experts who were willing to put up bridge capital to finance construction, and we had an Ontario public eager for impact investing options. At that time, we borrowed a historically successful model from countries like Denmark and Germany, where over 80% of renewable energy projects are owned by local communities and co-ops. The Ontario public has historically been untrusting of large corporations from the outside coming in and building massive renewable energy. But using the cooperative model, we've seen more of the public embrace and demand more renewables, especially when they have a financial stake in the project. We're managed by a board of directors that provides strong oversight in the day-to-day workings of the co-op. We were developed by a project incubator, Trek Renewable Energy Co-op. Trek has been developing community power co-ops since 1998. Our multidisciplinary board includes one of Ontario's most prominent lawyers who specializes in co-op and non-profit securities law, a chartered accountant, a former VP of RBC, as well as solar developer, marketing consultant, and public policy specialists. Ultimately, we're run by our greatest asset, you. Because we're a co-op, each member, no matter how much they invest, has an equal vote. Members vote at the annual general meeting and elect the board. They also add to the everyday value of the co-op, participating as volunteers and ambassadors for community solar, if they so choose. Our impact is easy to measure. By the end of this year, we'll have enough clean solar capacity to power over 500 homes. We've already generated electricity equal to over 2 million pounds of coal burned. Unlike some impact investments, Our impact is easily measured and it's 100% transparent. Please visit our website at solarbonds.ca to see the electricity and revenue we're generating in real time. The economic return is also easy to monitor from our website. So far, we've generated over $2 million in revenue. The social impact is unique to a co-op because when one person builds a solar project, their friends and family may hear about it. But when 1,000 people get together to build a solar project, friends and family times 1,000 are affected. We also estimate that through community events, our public outreach, and our members, we reach at least 50,000 people per year. Here's a quick snapshot of our current project portfolio. These are the projects that you would be investing in as a SolarShare member. These projects are all fully built and operational. There are 23 so far, totaling about $11 million. The most recently connected project is called Vanastra, and it's located in Clinton, Ontario. It's on the site of a former military base. Most of our projects are housed on commercial industrial buildings with mixed uses like cabinet makers, storage facilities, garlic and ginger importers, mushroom farms, and more. In 2013, we were awarded 12 new FIT contracts to build new projects in Peel, York, and Toronto regions. The total portfolio will be an additional 3.7 megawatts, enough to power about 400 homes. Construction has already begun, and most projects will be built by the end of the year. Now, if your investment is only invested in projects that are already built, you may wonder where we get the capital to finance that construction. SolarShare has a competitive advantage in that we have a small group of private lenders made up of some board members, other angel investors, foundations, and a few private businesses that finances the higher risk phase of development. Once the projects reach commercial operation, our bonds refinance 30% of the debt, freeing up money to build the next project. 70%, in order to keep the refinancing risk down, is held by long-term debt. So what are the risks? The risks can be broken down into these three categories: asset and operational risk. Similar to developing your own solar project, there are various risks associated with technology and performance. Our mission is to find the lowest risk way possible for the public to be included in solar development. So this goal is ever present when we're choosing partners in technology. We always err on the conservative side, choosing tried and true technologies and conservative estimates of production. Market risk is a factor because if interest rates were to skyrocket globally, for example, we'd have a hard time refinancing and selling your bond to someone else after 5 years. While we're seeing interest rates rise, it's not a significant increase, and it's unlikely that the 6% or more we'll be able to offer in our 5th year will be unattractive to investors. We're also researching the development of a 15-year bond, which would further lower the refinancing risk. Financial and cash flow risk. Our predictable cash flow is one of our competitive advantages. As a bond investor, you're only investing in projects that are already built and carry 20-year secure feed-in tariff contracts with already predictable revenue. These contracts can't be canceled by government. And of course, the fuel costs are the most predictable because energy from the sun is free. You can also invest through your business or foundation. But as a business or foundation, you can't be a voting member in the co-op due to Ontario Power Authority rules. These values align charities, foundations, businesses, and associations will show you that you're in good company. These organizations have all invested either in bridge loans to fund our projects, or in SolarShare bonds, or in both. To summarize, the investment looks like this: minimum $1,000 and $1,000 increments from there. The bond is locked in for 5 years, and after 5 years you can redeem or reinvest your principal amount. The 5% annual return is paid out semi-annually every June and December by direct deposit. And I should mention we have a great track record of always paying these on time since we launched in August 2011. Revenue is stable and predictable because we're backed by 20-year contracts with the provincial government. The principal is secured by mortgages on title. If you're ready to invest, I encourage you to visit solarbonds.ca/invest and download our investment package. Click on the download investment package, enter your email, and you'll immediately receive an email with all the information you need to sign up. If you're interested in becoming a bridge lender or a volunteer, you can also contact me about those things. I encourage you to join us today, become a co-op member, invest in our projects, and help us invest in a brighter future. Thank you so much for listening, and please let me know if you have any other questions or comments.